Hey, welcome investors to this live stream, 40 Finance channel. My name's Geoff Beers. Just hopping on this afternoon. I didn't have time this Monday to make a new video, so I thought I'd say hi to everybody through a live stream, and we'll kind of take a look at where the market's at and see, what direction do we think things are headed with yet another sort of slow day. Now, last Friday, we had an epic downturn, and yet by the end of the day, the NASDAQ eked out like plus 1% or something like that. So while we've only got 29 minutes left, you can never be too sure where things will land. Hey, Andy and Tom Brady. Thanks, Tom Brady, for confirming that the live chat works. I appreciate you guys who post the first one, just so that I know it's working. But just a quick peek at the market right this second. Let me refresh, make sure we get the latest and greatest. So S&P 500 up just a tad, Dow up a little bit more, NASDAQ, which is typically all I care about. Another red day, at least for now. Got as low. You can see this graph here. I think it was heading to minus 0.8%, something like that. Russell 2000, huge dip for a single day, 2%. Oil staying about steady. That had been going down. Gold and silver both down. If you're into precious metals, silver in particular under $25 is mildly intriguing even to me. 10-year bond rose 3% today, which is, that's pretty big for a single day, even though it's at a molecular scale at 1.72. I didn't look at Bitcoin yet today. Bitcoin's having a good day, $57,000, up 3.5%. So mixed bag in my world. With anytime the NASDAQ's down, I'm having a bad day, is basically how it goes. And that's sort of been the tale here of the last couple weeks. My stuff that I own's over here. So this is, a big section of the chart that I pay attention to. And out of my stocks today, let's see, Bitcoin's up a little bit, TAP, which is Coors Light and Molson, kind of consumer defensive, so it's doing fine. And they actually insinuated they'll bring their dividends back in the second half of the year, so that's good for long-term shareholders. I don't expect TAP to make me rich, in case you're curious, but it actually makes sense as a dividend stock, particularly this day and age with this market volatility, to hold some sort of one of your dividend favorites, whatever it is. I drink a ton of Coors Light, so mine's TAP. Yours might be ExxonMobil, whatever. Visa made a broad-based announcement on building a network to handle Bitcoin transactions, not the type of network that consumers would buy and sell on, but more or less like a commercial network. So a lot of people threw Visa out on that Department of Justice investigation. That doesn't concern me. And now they're, plowing more into crypto. It's a fairly positive sign. Rocket making a small bounce today, nothing notable. Amazon, anytime Amazon is up, even this 0.88%, it's good news for me. I think Amazon has more room to run. And it's a safer play if you're looking for safer plays. Facebook, Amazon, Google, I think they're all in that neighborhood. BFT, if you're a BFT fan, they are finally turning to PaySafe on March 31st. So if you've heard me talk about BFT PaySafe and you had any interest whatsoever, this $15 share price is really close to what it's been trading at. So take a look at it. See if you're interested in PaySafe. I think it's a good play. However, just know that when it comes to March 31st, it could go, 50-50 chance, right? It could go up or down. But I think long-term, there's something to it. All right, let's see what else is on my watch list, and I'll jump into some questions. DocuSign, high on my watch list, under 200. It's not quite there, but this is a name that I think has a very bright future. Matterport, I'm kind of hit or miss on Matterport. It's down another 5%. MRAM, waiting for this to get closer to $5 even. Optimize RX. This was on one of my potential growth stocks, one of those videos. I don't own it yet, but it has an interesting business proposition. IGT, Bitcoin. Airbnb's been in the 170s. It looks like a deal compared to what it's been trading at, but a couple of like Morningstar and some of the like old school valuation networks have Airbnb at pretty close to $100 for like fair value. So I'm going to let that one drip out a little bit. Redfin has been way down lately. Melly, they lost all their legs, which isn't bad. I mean, you can make the argument for Melly to get in well under $1,500. NVIDIA up a little bit. Who else is notable? AMD, you know, if you're ever thinking about AMD, it's been in the $70 to $75 range for quite some time. I would say for long term, there's nothing wrong with buying that in that price range. NEO now under $35. GM trickling back to where it was a month ago at 55. Disney, I think, is a great buy long term. I wish it was closer to 150. Intel, Expedia, that needs to get down to 150 before I'd be interested. Google under 2,000, I think, is the target. We'll see if it ever gets there. Zillow at 100 or below for me. Love Zillow. I take it at 99, and that's still buying it overvalued. All right, let me transition here. Just to be fair to my title, will growth stocks ever go back up? And I believe so. So I know that there's a lot of sentiment in the market right now about just leave this growth, SPAC world, whatever behind and move on to Hilton and Marriott hotels and Carnival cruises and JetBlue and stuff. I'm not making that trade. I'm not doing that. Mostly because, in particular with travel, I don't think travel's cheap. I did a video on that last week. I don't think travel is necessarily cheap stocks. So what I'm doing is averaging down. The stuff that I own, I bought for a reason. The stuff that I own, I did my personal research on, and it wasn't based on, Meet Kevin telling me to buy stocks. It was based on me reading everything I need to know about companies for the long term. And so I'm not a heavy buyer right now, but I'm poking in Palantir, for example. My starting price on Palantir was at 27. I'm just going in on days like this and I'll buy like 5 shares, 10 shares, stuff like that. If it goes under 20, I'll buy more and lower my cost basis for the future. Enphase has probably been hit the hardest. I've talked about it a lot. It's in the 140s. They just had a press release with a distributor in South Africa or somewhere like that they're going to be working with. I'm not worried about Enphase. It's unfortunate that it's down. I'm at like 180 now. After averaging down, it's at 140. So that part's unfortunate. But the long term, I'm not worried about Enphase. And I'll keep buying a little shares here and there, keep lowering my cost basis. Might take a while, but I believe in these companies. I do not believe fundamentally for myself that American Airlines, for example, is going to do anything but get back to par. That's the truth for me. They're not going to grow. American Airlines isn't going to grow past the levels that they did in 2018. So what you're playing is back to par. I have trades that are back to par. Sabre, for example, a low-cost travel provider. But I want to stick my core holdings in growth, technology, consumer. So nothing changes. I do believe these things will bounce back. But it wouldn't surprise me, too, if it takes until fall, frankly. I think we'll just have a lot of roller coasters. and position yourself in one way or another for a run into fall. And that's my take. So now, as always, I really appreciate you guys showing up. So I like to get into the questions. Let me get a quick drink and we'll jump in. All right, so Tom Brady, I'm sure it's the real Tom Brady. I can't imagine Tom Brady wouldn't take the time out of his day to come see me. But Tom has TQQQ. I can never remember which one this is. Okay, this is Ultra. So I do not own this, but I do kind of like this play, if it's what I think it is, which is the triple leverage. Yep. Can we see this on the screen? So it trades 3x the daily performance of the NASDAQ 100. I have thought about this many times, about using this strategy. It's a different strategy and you need to study up, but when you reach what you think is the bottom of the QQQ, whatever it is, you get into something like that. And if the QQQ goes up $5, yours goes up 15. Now, when the QQQ goes down $5, yours goes down 15. And it's not an apples for apples exchange. In a roller coaster ride, you could have situations where, let's just say Monday and Tuesday, the stock is down. So let's just pretend for fun that you go down 30%. But then the next day, it's up 10%. And you would think that you get back to par, but you're actually not, because you're going to go up 30% from the low point, right? So just keep that in mind. It's not simple. It's simple math, but it's math that is often overlooked. So if you're going to do the leverage QQQ, which again I've thought about, and if I ever saw some wacky 20% downturn in QQQ, I probably would buy it because I believe so strongly in QQQ. But just know that you should probably put it on your watch list and watch it like a hawk, like your money was in it for 30 days, so that you could make sure you understand just how this thing moves, because it's a little bit of a shock to the system. But, you know, tripling up on wins is good. So I'll leave that there. Tom also asked about FNGU. FANG leverage. So same game. This one's just for FANG. Let me just make sure it's just for FANG. Can't really tell from this description, but assuming it's the legit FANG, you know, Facebook, Apple, Amazon, Netflix, and Google, no Microsoft, then this could be an interesting game, because I do think FANG is the new value with where we stand at today. So I would look into it. Again, get really comfortable with the way it trades. SOXL was your last one. Okay. Semiconductor 3x share. So these are all leverage plays, and I don't think that they're bad calls. I am not playing in any of these. However, for this one, like the semiconductor one, I'd have to get really deep into these holdings, because semis are sort of a mixed bag. And they're not, okay, they got Intel, Broadcom, NVIDIA. I like this because I like where that semis are flat. But I think that on semis, you got to dig into those holdings, the NVIDIAs, the Intels, whatever, and get a feel for what their flatline price would be, or their fair value price, and how much upside do they have from there. But I'm not against any of those concepts, but I've never done them myself. But if I saw a big crash, I would strongly consider it. Stanley, thank you. I appreciate you too. Daniel, how you doing, Daniel? Gerodric, yes, they're going back up. Okay. Evan, NASDAQ, yep. NASDAQ, it's all NASDAQ, guys. Like, there's nothing this past few weeks, it's all NASDAQ. I think S&P is beating the NASDAQ year to date right now. So whatever, like, who would cash out now? Like, that's what I don't understand. It depends. Like, how far are you down on the NASDAQ? Like, are you down into like the 700th market cap position in the NASDAQ? Okay, well then, maybe it wasn't so good to start with. But if you're like in QQQ and you are selling out now and you're about to switch to say S&P 500, I don't know. I think, my perspective is to buy into QQQ while the price is down and lower your cost basis. But I can't promise you that that's the winning strategy. Kevin is from Florida. How you doing? Good to see you. Andy said Visa. Yes. So just pausing. I mentioned Visa a little bit in the intro, but just to be 100% clear, the Department of Justice is a nothing. It's, and I hate to say that, but go look at the Department of Justice coming after every corporation known to man. It never leads to anything but a fine. And in this case, what DOJ is looking at is Visa sort of forcing merchants into higher debit card transaction fees just by the way they've kind of set up their network, and they sort of four-walled them a little bit. I think that much like you see a Facebook and Google do, what will happen over the next 6 to 8 months while this trial goes on, which inevitably it's going to go on for a year at least, and Visa will start loosening some of those restrictions that are tied to it, so that eventually, when it's time for the trial to come to light, Visa will have already made XYZ changes, and they'll come to a settlement, and Department of Justice say, okay, well, you fixed some of the things already. It's kind of dumb for us to keep going. Here's a fine for $100 million, which, Visa basically makes in a day, and move on from there. So Visa, I think, is still a buy. The one thing that I would say at $215, I really liked it under $200. I had a conversation with somebody from the channel where we were talking about it, and I was like, try to get greedy and wait for $200. I don't know if you'll see it again, but there was opportunity this year to get it under $200. I'm just going to look at the graph real quick. Year to date, you were March 19th at 206, Feb 19th, 204. Okay, so you had to go back to Jan 29 to get under 200. Hard to say if you'll get under 200, but last week you could have shaved a couple bucks off of it. So either if you buy in for Visa, I would say that you buy in at 25%, as I often recommend. So if your budget is $1,000, you start at $250 worth, and then you add on the red days. I'm just looking at TipRanks to see what folks are saying, particularly since the Department of Justice. Here's the line for 13 days ago and up. We've got 250, 297, 250, 245. So you take away the lowest, you take away the highest, and you're probably right at 250. But that's just for 12 months. And this is a long-term stock with a small dividend, 0.6%. So yeah, I'm still way in. And I don't know if they here it is, just real quick. Right here, this was their press release. They're going to have a settlement on their network with crypto, somehow partnering with Ethereum network. I'm not going to pretend that I understand it all, but I think the most important part of that headline is that when you don't stay away from Visa because you think that crypto kills Visa, that's not going to happen. Probably not in our lifetime. Visa is set up with what they call payment rails, ways to send money from a bank to a card to a country, to a cell phone, whatever. They've set up this unbelievable network. They call it the network approach. That work is so valuable that I think that Visa has a stake in every fintech play going forward, just because they can provide the infrastructure to go from person A to person B, company A to company B. They already got it. So they're going to work their way in the crypto system. You just wait and see, and wait for the day. I don't know when this is, by the way. Wait for the day that your Visa cash rewards can come to you in Bitcoin, right? So whatever card you have, I have one that does like 1% on everything, cash back plus 2% at whatever gas stations or something. Wait until you can change that to Bitcoin. It'll come. Visa's not stupid. They'll set a card up like that, and then everybody, that's just going to be bananas when that happens, I think. All right. Ashish is asking about market manipulation. It's a fair question, and I'm not deep enough in the sewers to really tell you for sure. But I will say that anytime you had the bull market run like we had last year, heading into this year, everybody's looking for an advantage, right? Everybody's looking for an advantage. And inevitably, when they find it, they overdose on it, right? So the block transactions that we saw from what's the name of it? The investing firm that just sort of went under, got margin called or whatever. They overdosed on their own sauce, probably similar to what will eventually happen with GameStop. If it hasn't happened already to some people who bought in high, they just overdosed on their little thing. They had the advantage. GameStop traders, the Reddit crowd, they had the advantage. They found it. Like, they totally found it. And there was a certain point between 0 and some number that's yet to be determined where they still had the advantage. And it's just, what is the actual top for GameStop? It's probably not $300. It's, it might have hit that, but that's probably not where it settles. So anyone who comes in after, say, $100, if that's even the right value, they're all going to get burnt, and that's how the market weeds out those who really know what the advantage is and those who are just playing momentum, right? C Brocket, another mad day of volatility for Rocket. I looked at 1 second in this morning in between my Zoom calls, and yeah, it was up like $25. Let's see where we're at today just for kicks. And we're at $23.93. So I'm still hanging. I got my dividend, my special $1 dividend, and I haven't owned the stock for a year yet, so whatever. Let it ride. I think, as you guys are probably tired of me hearing, the housing market is not struggling. Interest rates are still historically low. There's a lot of ways for Rocket to make money. I'm going to at least hold the stock for my 1-year anniversary, which will be sometime in August, I think, something like that. And that'll pair up very well with another 2 quarters of earnings reports from Rocket. If I wake up one day and it goes to $50, then I'll have to revise that plan. But I did wake up one day and it went to $40 a couple months back. And I had my finger on the trigger, but I was like, I'm waiting for $50. And who knows, might look back at that and be disappointed. But I'm already up, because my cost basis is $18 or $19, and I got a $300 dividend for my 300 shares. So I'm already up. It's, Rocket could evaporate, and as long as I got my cost basis back, I actually made money off the dividend. Not a ton, but it was something. Let's see. I lost my place. I'm sorry. Volatility for Rocket, okay. Gerodric says, you and me both, just worrying about the NASDAQ. So, yeah. I honestly, it's funny on the news when they put the Dow whatever. I'm just like, who in the fuck cares? Seriously, like, does anyone just have Dow 30 components in their portfolio? Like, it's such a waste of time. Plus, it's market cap, right? So it's like even dumber. And I look at the NASDAQ holistically to see how my day's going. Evan, who's hyped for Arc X? That's the spaceship one. I'm out on that one, but, you know, I hope for everybody who gets in on these space plays. What is a Virgin Galactic and maybe SpaceX? I don't know them all. I'm not interested in that niche myself. But man, I hope you guys get paid for that, because if you're investing today for space travel, you deserve to be rewarded in 5 years if that stuff really happens. So I'm rooting for you. It's just not a game for me. Andy says Visa is where the money is in the coming months, not PayPal, Square. You sting me a little bit on the PayPal. I do agree with you that I think Visa has better outlook in the coming months than PayPal, Square. 100% agree. I'll make the argument that PayPal and Square have some interest because of Venmo, Cash App, that stuff coming to them, direct deposit, if there's anything left with stimulus payments and whatnot. But you know what's interesting about that thesis, at least from a Square perspective, you know, there's a lot of folks like me who thought that crypto would like destroy after the stimulus came out, right? That it would just go straight into Square and that everybody was going to buy Bitcoin with it. But I didn't see that, at least not in the price of Bitcoin. Maybe it's still coming, but I think people actually took the money and maybe spent it on regular things, you know, TVs and PlayStations and whatever, vacations maybe. So that surprised me, but maybe it's still coming. LD's here. Good to see you. Another day in the house of pain. This is true. Pickle Rick canceled his Lambo order. That's good. You didn't want that anyway. Buy yourself and I know you're kidding, but if I don't know what Lambos cost, I'm just going to make up a number and say they cost $200,000. Dude, buy a rental property, man, for that. It's not going to get you as many ladies, but it'll certainly pay off more than Lambo will. All right, Tom's back. He's got print today instead of Arc X. I don't know what print is, so I'm going to take a quick look. PRNT. Okay, 3D printing ETF. I could never, like, I've seen 3D printing. This is a 1 year chart. Looks like it's, you know, may not be a bad buy, well off of its February 9th high of 49. You are trading the same as Jan 12. Expense ratio is under 1%, so that looks good. Doesn't say if it does a yield. Probably not. No. 3D printing is intriguing to me. I haven't quite figured out what the business, if the business case is ready. Like, I get the business case in general, but mass production has always been a thing for me. Like, and I don't know enough about the industry. Can 3D printing, you know, work its way to mass production? So whatever the item is, you know, start with something simple like a tennis shoe. Could it work its way to that? I don't think it can yet, but it's definitely an interesting industry. So good luck with that. Pickle Rick, he's bought the dips. He's out of cash. Dude, you and I we're dead on. So I've bought, and I spread it out. I bought pieces, parts all the way down, onesie, twosie shares across the board, just a lower cost basis. And I'm starting to run out too. And so whatever, I'll just keep, you know, scraping by, throw in a few hundred, you know, here and there. I do have a tax return coming eventually. So maybe I'll split that in half between, you know, stuff for the family and stuff to invest. But it's funny how, like, you don't think it can go even lower than it does. LD loves AMD, but is it really the best deal? Yeah, I think that's the hardest question for everybody. Like, you take a stock like AMD or anybody like it, like, and it's like, that's a lot of likes. What is the best deal? I've seen a couple reviews on like Facebook lately that use it to say it's the best deal. I could see it from fundamentals perspective, but there's a lot of stuff that's still high. I have yet to see something that's like, I'm just falling over myself to buy it at this price. Even Amazon, which people have said have struggled, and I managed to get one of my 2 shares under $3,000, so I was super pumped about it. But that was really just like an arbitrary price, It wasn't like under $3,000 means that Amazon is the steal of the century. It just meant like, I don't know if we'll ever see that again, knowing what we know about Amazon's earnings growing and growing. So to LD's point, it's probably, if you're one of the lucky ones who has more cash than I do right now, you probably should spend a night like really prioritizing what you would buy next, right? Go through, if you think it's AMD, but you want to throw Micron in there, to go against it, or NVIDIA or whatever, compare it against 2 or 3 in the same sector and pick the one you like the most. It doesn't have to be the cheapest because you want to take into account growth rate as well. But then hopefully you get down to your 1, 2, or 3 picks, and when it is a good red day, then you can push buttons instead of scrambling to do research. All right, let's see. Planner number 1, can always get a job with Uber, sorry. Yeah, I guess. Stanley Song, do you have any BTC or altcoins? Stanley, I only have the ETF trust, GBTC, in my retail account. On the IRA side, I have ARK, and they invest in GBTC as well as a lot of other companies that have ties to Bitcoin. So I also own a small lot of Square, about 25 shares. I have a bigger lot of PayPal, and they do a lot with Bitcoin. So that's how I'm playing it. I don't have a wallet with specific coins. Maybe I should, but for now, I want to keep it in my stock market account. It just makes it easier and the tax year if I were to sell off, if all that information came from one place. So that's my number one reason why. If I had Bitcoin on my phone today, I don't know how it changes my investing outlook any. I think that I would get marginally better gains just by not having the expense fee, but I'm not using Bitcoin to buy anything. I haven't had that need in my particular life. So that's why I do it the way I do. Drink more Coors, get the stock price up. Yeah, dude, I'm try. I drink Coors Light is my go-to, and I'm a little bit older than probably some of you, so the craft beer revolution and all that crap. I'm stuck in the 90s, with Bud Bowl and Ice Cube used to be with Coors Light. I'm with all those guys. So I stick with it. But look at, today's not a good day to buy Tap because it's up past 50 something. But if you ever see it go down, read into it just for your own amusement or compare it against some of the other alcohol brands. They have a pretty good foundation to do good things. They just never quite pull it off. So they have a huge seltzer rollout this year across numerous different brands. And they're streamlining their factory. They have a partnership with Coke for a beverage. I can't think, the name escapes me. But on paper, they do a lot of good stuff management-wise. On the execution side, it's always 70% of what you thought it would be. So by no means am I would ever say buy Tap to the audience here, but I would say that if you decide to get into alcohol on US-based alcohol companies, I think that you should include TAP in your research because it is a relatively cheap stock with a dividend, and it goes toe-to-toe against any, it's not Anheuser-Busch, but they are called something else now. But you compare it to any like American-type beer stock, minus Sam Adams, who's done a heck of a job with their seltzer. TAP goes toe-to-toe with all of them. All right. I'm SOL. All of my can't lose plays are down. So if you and I are alike at all, so I don't know if I ever called them can't lose plays, but my riskiest plays, Unity Software, Enphase, Palantir, and there's probably something else that are for sure my riskiest plays. They're all down. I'm negative on those stocks, not by $1 million, but I'm just buying onesie-twosie shares to lower the cost basis and then hold them tight because I believe in the companies. Luckily, I've also had some that have done well. Like DraftKings has hung in there. It's under a little bit of pressure today, but for the most part, I bought it at like 35. It's doing fine, and I think that world gets better. Lion, how you doing? Good to see you. Who else is here? Sorry, every time I touch this mouse, it scrolls down like 5 places, probably because I go too slow answering questions. Mike G, I have Insane Russell, and it is tanked. Oh, Russell 2000. Man, today's a day on Russell 2000 that you would start to wonder about whatever 2x leverage ETF they have. Although looking at 1-year chart, that thing's only been up. Today, barely trades. It's March 4th. Yeah, unfortunately, you might have more pain to go. But it's 2,000 stocks, right? So it's really hard to tell where that thing goes. Diamond hands required, yeah. Tom Brady, did you read the released ARK X holdings? I did not. So I just mentioned earlier, as you guys probably heard, I just like the space isn't a thing for me. I'm not saying it won't be something. It's just too visionary for me. I only know what I know, and it's hard for me to imagine. I have a hard time imagining consumer use in space. I could imagine industrial use in space. Like I've heard rumors, I've heard people talk about the fact that like Tesla, for example, was trying to do like a satellite network for Wi-Fi, and that was like in their long range plans. And that kind of space stuff, I totally get. Space missions that either launch or repair things in space, I think totally get that one. So more frequent opportunities to launch or repair, I could see. Consumer living on the freaking moon tent, I'm not interested in that, and I don't think we're anywhere close. So I have more to read, to be fair. Mike G, corporate tax increase. I don't think Biden can legally do that. He can't do it tomorrow. I think it has to go through this. Let me stop there and say that I don't know the answer for sure. My understanding of the tax code, though, is that it was not up for a major change until it came out in 2017. It was plus 4 years. So this is 2021. So maybe they could propose changes this year, but it would not take effect until fiscal 2022. Just know that it doesn't happen overnight. And then some of that other stuff that might spook you a little bit, like inheritance tax and whatever the Bernie Sanders tax over 400,000, if your income's over 400,000, it would affect you. You know, that's a pretty small amount of people. And it was barely incremental. If you made $410,000, for example, the Bernie Sanders tax, it would only be, the only thing that would change for you is the income between 400 and 410. So for someone who owns 410 or makes 410, it would barely be an increase. Now, if you're in $800,000 a year, which I'm guessing is not most of the people who are watching this, then that's a pretty big impact, right? But this doesn't concern me at all, I can tell you that. When is Alibaba going up? Who knows, man? China is a mess, man. An absolute mess. I don't know if you guys saw this. I should try to find it before. Let's try, what's the name of that? K-Web. Trying to find a particular article. Just give me a second. This is all 8 months ago. Let's try Google. Chinese internet stocks. Now we want to go to news. Forced deleveraging. I've got a point to all this, just hang in there. So basically, this is it. Regulatory concerns. I don't know if I'll be able to read this or not. But you need to read into this if you're in Chinese internet stocks. Basically, right here. Chinese technology stocks dropped on growing concerns of delisting from U.S. That wasn't what I was getting at, but that's in the game too. Plans by Beijing to take control of companies' user data. Okay, let's see if we can find that little snippet somewhere. Because we want to get past the delisting. Regulatory crackdown. Okay, we ran into a paywall. I'm just going to skip it. Here's a short version that I understand. Go do your own research so that you don't, that I don't lead you down the wrong path. You've got all these big China internet companies, very similar to United States. So, they've got Baidu, we've got Google, we've got Netflix, they've got something just like it. And what Beijing is proposing verbally right now that would affect Alibaba, Baidu, all their social, Tencent Music, all that crap. They want to have a government-controlled population data bank of some kind. And that if you're Alibaba, you cannot own your own customers' data. You would populate the data from an order or advertising or however you get it, and it would go into this big government-controlled database, and Baidu would have certain accesses to it, Tencent would have certain accesses to it, but you would no longer own it by yourself. So major shakeup. Not good news at all. And then on the other front, as that article insinuated, the tensions with Biden, surprisingly, they're not going as well either. So Chinese stocks are under a lot of pressure. As you guys know, I don't invest in Chinese stocks. However, for me, I'm still interested because I own Taiwan Semiconductor. And even though that's not China, there's still some concerns in that game too. So I'm not rooting for it to happen by any stretch of the imagination, particularly the political drama, because Hong Kong and places like Taiwan Semi are going to be potentially used as hostages in this game if the politics get out of hand. They're not close to that now, but just be careful. I don't think there's anything wrong with buying Alibaba for the long term. Just know that the immediate future is mixed. And not because the company isn't making money. That's what sucks, is when your company is making money like Alibaba is, their EPS is going up, all those things, but your share price is being held down by storm clouds. It's the worst feeling in the world. And I kind of feel like that's where Amazon is for whatever reason, just to pull it back into my world. At $3,000, Amazon has a little bit of storm clouds on, Democrats poking into technology, but also like the Bezos retirement, the union concerns. So they've got a lot of storm clouds. Now they're still printing dollars left and right. So that part is good. So I don't mind buying in. But storm clouds could keep the stock price down for a while. All right, Mike G had Baidu and Tencent. Those dropped like a brick. I'm out. He took his 40% loss. That sucks, but he doesn't have to worry about it anymore. And assuming you win, Mike G, somewhere between now and the rest of the year, that 40% can offset other wins on your taxes if you're in America. Anthony's pretty much on the same page as me, doesn't touch the Chinese stocks. Song says, correction, either back to November price or worst. I didn't catch that one. Ali's asking about crypto, Bill Brady, DraftKings versus Penn. They are both strong. They both have their advantages. I'm 100% DraftKings with no Penn. And it's mostly because I'm happy that DraftKings doesn't own physical casinos like Penn does, which could either be an asset or a liability. It just depends on how you want to look at it post-COVID. We'll also add that DraftKings does not have the debt load that Penn does. Same with me, EV SPAC. Sorry, I don't know where that's going. Jordan, besides Enphase, how do you feel about solar? I think there's some opportunity in solar. We just talked about Chinese stocks. Jinko Solar is Chinese, so please be careful. But their price was getting hit hard, and that was sort of looking like a stock that if it wasn't a Chinese stock, I would buy into if it was America-based, because they're doing all production and materials. Now, the way things are going over there, I'm not so sure. But to your point, Jordan, like Solaredge, haven't looked at Canadian Solar in a while, but Solaredge is one that trades on a very fair PE that I'm guessing has come down even more lately. Let's type it in. I got to get back to Yahoo. NASDAQ down to 0.60. All right, so here's our year-to-date on Solaredge. 365 down to 260, which sounds like a screaming deal. This PE of 97, if I remember, changes rapidly this year. All right, so a year ago, EPS 411. They'll probably get to 5 this year. So right off the bat, I know it says 482, but I'm making the assumption that solar has a good year. So let's just say they hit 5. So that's a PE in the 50s by the end of this year. And then next year they're adding, this will probably be between 630 and 650 by the time it hits. So there's something there. It's not the cheapest PE you ever see, but you've got, this is revenue, plus 27% and plus 24%. There is definitely something for the value shoppers in solar right now. Canadian Solar is another good company. Their PE at 1894. See their projection. They're going to grow 62% this year if everything hits, and only 9.5% next year. So they tend to slow down. This SunPower, you read deeply about SunPower. It has a great PE. I believe it has a ton of debt, and it's a 50-50 stock. Not too bad. I mean, 700 million versus 232 million cash, revenue of 1 billion. Where's their short? 25% or so shorted. So for whatever reason, SunPower is a 50-50 stock because there's a lot of people fighting against it. And I don't really understand fully why. But their growth rate, 34 and 23, there might be something there. So to answer your question directly, Jordan, I think you can pick and choose your way in solar. There's also that TAN, TAN ETF, which I certainly would consider. They have, I'm trying to think the name. So I know that Enphase is either their top or their second top holding. But most of those companies I just went through, it's in there. So you could take an ETF like TAN and just wait for the crappiest day. The downside of TAN is you're not going to get the high percentage upside. It's going to go up, right? But an individual stock in the solar space would likely go up higher. But it depends on your risk portfolio. There's nothing wrong with playing it that way. All right. Hi, Raul. Anthony, Dow affects my portfolio. Oh, you're in commodities and biotech, so woo, good luck. That's tough. It's good. I'm not smart enough to figure that out, so that's what I meant by that. Elizabeth, I'm up 90% on CVX. I've been holding since 323, so you are over 1 year. Do you think oil stocks are long-term hold? I think they've got longer in them than now. Chevron, I'm just taking a look at your year. So I think you've got two things in your favor. The first is you've made it past your 1 year from a tax standpoint. So now your gains are taxed at long-term capital gains, which for most people is less. And you have this little nugget. So Chevron, you're going from minus 20 cents last year to $5 this year in EPS. So this is your big growth year. Next year gets, sort of back to normal. I don't know, man. I don't feel like I would sell it today, would be my gut if I held it. Here's the number that you watch, probably more than the stock itself, is this oil price, which has been a wreck. Let's get a year-to-date on oil. So despite the fact that consumption is up, oil started to hit in here in 67, 66. And then I don't know why it went down. I'm not smart enough. I don't trade oil, so I have no idea. But you get this number back up to here, or maybe to $70, $75 a barrel, and Elizabeth's CVX stock just continues to go up. So my 2 cents is, why not stick with it? I don't see the oil market lacking demand going forward. I think every day longer, more oil is needed. And, I think electric shift in 10 years is a thing. The shift to electric in 8 months is a zero thing. So push the envelope a little bit. Try to eke a couple bucks more out of it. All right. Do you buy any crypto? No, I answered that. It's GBTC for me. Thinking of Intel, Intel is so intriguing. You guys know I love talking about Intel because I think it's a company that when I was first learning in the stock market was one of the highest rated stocks. And then it's sort of had its fall from grace. But I also get a little territorial on Intel, even though I don't hold it individually. That people were all like ragging on its demise, like it'll never, like it's a company that was going to go out of business. And I get sort of ticked off at that thought. I like Intel for as cheap as you can get it. You do get a dividend. I do think their plans to expand are good. I would not trade it for my Taiwan Semiconductor. So that's me, my personal preference. I think Taiwan Semi, who by the way, just had a press release that they're raising prices on their consumers, and they have more consumers than they know what to do with. So this is a good thing. Sometimes when you raise prices, people run away, but in TSMC's world, they have the technology to support it. So here at Intel, this is, we're kind of on the up after the last earnings release. you know, gosh, it was awesome if you got in, you know, anywhere around 50, 55. But, you know, are you going to let $10 break you down on a stock like this? I'm not sure. I would just get it as low as I could get, maybe buy 10%, you know, at 65 and hope the market keeps going red. This is a beautiful thing down here with the dividend at 2%. And I don't think there's much debt. I don't want to speak out of turn. This is the statistics on their PE. So way back in 17, 18, 19, you're at a 14, 16 trailing PE. They're only at 12. And the olden days, they were forward PE, 14s, 12s. So they're right there, almost at fairly priced. PEG ratio, a little bit higher than last year. Let's take a look. This is what's great about chip manufacturer, or most of them. Profit margin, 26%. Revenue, $79 billion. Total debt, $37 billion. So that's a combo of short and long term. Where's the cash? $23 billion. So they're not at, I'm not saying that they're worried about it. I thought they had more cash than they did. But I like Intel. I am not sure how much is left to run in the short term on 65, because now you're running on news that they're going to build a factory, which sounds like the best time to buy. But unfortunately for Intel, they've had a lot of trouble executing over the past 2 years. So I'd say I'd like to see it happen first, I guess is my take. And I'm rooting for them. I'm on their side. If you own the QQQ, you're rooting for Intel. I own some other stuff that they're in there as well. A lot of crypto exchanges do not calculate cost basis. Very important to know. You're right. I go back and, because I'm a proponent of the GBTC, but I get attacked here and there in the comments on those videos about, dude, you're paying too much and all this stuff. But to Tom Brady's point, maybe I'm paying more than the average Joe, but it's not like Coinbase is free. It's like, come on, you're paying to transact too. The only difference is that my security, I arguably pass off the cost to the next guy when I sell because it's a unit, right? And I'm not paying an additional expense. It's the unit cost. So GBTC ticker symbol is $55 today, or whatever it is, right? I don't know for sure. I bought it for $55. I didn't pay anything else because I'm on a free trading platform at Ally. And if I sold it tomorrow for $56, the other guy's not paying it, and I get the full $56. So it's all relevant. People get super territorial about it. I don't think you need to get territorial, but don't try to play like Coinbase isn't getting theirs, because you're paying a fee to trade on a lot of places. I don't know if you are on Square and Venmo, because I don't own individual coins, but just know that stuff's out there. Mike G, I'm not sure on China CQQQ. I was up 40%. I have a feeling it has everything to do with that internet. KWeb is a collection of Chinese internet stocks. I used to own that ETF. Those stocks have gotten hammered. So that's the only reason I can figure. And most of it's because now China's getting all regulation crazy. It's going to be interesting. And then Tom Brady mentions big Chinese hedge fund just got margin called. So he probably knows more than I do. Joe Schmo, fair value for Unity. Phew, not what it's trading for. Let's see if, I doubt Morningstar covers it, but let's see. So, by the way, I'm not sitting here promoting Morningstar, but I will say, no, they don't cover it. So what's cool about the old school places like that, Morningstar, let me pick a big stock. They might actually cover Palantir. Yeah. So what they'll do is they'll put this fair value, which actually this is, I'm I'm so surprised that Palantir's got a fair value of 24. If we went to Square, no way Square has a fair value. So, okay, fair value of 89, right? I'm not saying this is the Bible, but what I'm saying is they have a methodology that kind of like looks at what the company makes profit-wise and how much can those profits expand in the future, and they just plug it into their formula. So it's a really good way to make a point here. It's a really good way to compare the fair value of stocks that are in different industries, right? If you're trying to think about like who's going to go up further, who's actually worth more, if you went in and just used Morningstar to eyeball to start your research, I like their fair value assessment because it keeps you grounded. It's never the guy on YouTube who's saying, you know, imagine if the humidity was 97% and they had a CAGR and a TAM and all this. Like, no, it goes in Morningstar's formula. It's just a do to the other side, and it gives you like a no-nonsense approach that's replicable against dozens of other stocks. I wish they had one for Unity. I would guesstimate that if I was going to say the fair value of Unity based almost solely on earnings, it's probably a $50 and under stock. Just to be fair. It is definitely about those earnings. For me personally, at $100, it's about them doing more with earnings and sales than is known today. And that's a dangerous way to play. But I don't play that with every stock. I'm playing it with Unity because I do believe in what they're doing. But with Unity, if you're going to go with the analyst EPS, it's probably $50 some odd stock. If you believe that their revenue streams have the opportunity to grow more than projected, which is basically what I'm saying, then it's worth X amount more to a person like me. But hopefully that helps, Joe Schmo. I gotta check the time, guys. I only have a couple minutes left and I gotta run. Hen Hatch Productions, you're right about Target. I don't even remember what I said, but I'm glad I was right. Robin says total stock market ETF. I'm not, so Robin's not wrong. I'm not a fan of the total stock market because it's watered down. But if you are new, I will say that Robin, it's not a bad strategy, and it's probably the less risk averse strategy that's out there without question. I would make the argument that if you want more risk than what Robin says, but also more potential for upside, then you should look at the QQQ, which is the top 100 NASDAQ stocks. And if I was 22 years old and I didn't want an individual stock, I would be QQQ pounding it all the way home. And that's exactly what my IRA ETF is. I just did a video on it. It's roughly 23% QQQ. And the only risk there is the risk to the much broader market, which you're still going to see impacted in the total stock market index, right? So that's my 2 cents. There's a million ways to play it. Oh boy, Dwayne's got friends in the crypto space. Anyway, I'm going to pick out one more question because I do have to roll. Peloton. Oscar caught my eye with Peloton. Let's fire it up. Peloton intrigues me. I do not own it. But I will say this about Peloton that most people overlook. They're on the unfortunate side of a rumor, in my opinion. And the rumor might come true. The rumor is, no way when the world opens do people just ride their bikes at home, right? And they had this fourth quarter uptick, no surprise, because everybody gave their friends a Peloton. And so now the argument is this was the peak. But what's interesting for Peloton from a sales perspective that they are projecting and analysts are projecting, first of all, in 2021, they turned profitable. Now, this is still a high PE, 32 cents on $100. Next year, they get closer to $1. This could very well go up, and it wouldn't surprise me if it hit 50 cents. But the sales growth, even in 22, is 35%, and this is supposed to be, I don't even know how this is 125%. To go from 1.83 billion in 2020 to 4.1 billion, that's huge. And then add another billion on top of it. So my take with Peloton, if you're not invested and you're interested at this point, I'm waiting for under 100. I wouldn't, the most I would do is buy a couple shares at this price and hope to average down. But their sentiment right now is low, very low. Can we do year to date? Yeah, and our RSI is not even bottoming out yet. I know it's hard to see. It's out of 43, okay? It was at 22-ish on March 8th, and now you're going below the 200-day. So from a investment standpoint, I think Peloton's a decent investment. Before I bought it, though, I would get greedy, and I would definitely aim for under 100 because, again, it's a storm cloud stock. Nothing but bad rumors of people, suspending their Peloton purchases and throwing their bikes away. I don't think that's going to happen. But, there is that risk. And maybe if you get it cheap enough and they keep outperforming, you'll have yourself a great deal. So, all right, guys, thanks so much for joining me. The Google automatically does some sort of replay with this eventually that'll hit your feed. So I really do appreciate you guys coming out. Can't do a video for a couple days because I'm working on a big project, but I will be back eventually this week. So have a good week, and we'll talk to you soon.